What's going on, guys? It's Tyler. Wanted to run through extremely exciting topic with you today. What closing costs are, how they affect you, what sort of stuff to be looking out for when you're looking at your loan estimates and you're talking to lenders and things like that. What's that stuff to be kind of prepared for when you're kind of starting the loan process. But before we do, hit the like button, subscribe, make videos like this all the time as far as the loan process and different loans to look out for and how to best prepare yourself for a mortgage. And if you have any questions or if you have any topics you want to go over, leave a comment down below and we can hopefully get you a video out for that sort of thing, in the future. So down payment versus closing costs. So what is a down payment essentially? Your down payment is how much money you're putting towards the purchase price, paying down essentially what your total mortgage is going to be. So if you're buying a $100,000 home with an FHA loan per se, you're required to put 3.5% of the purchase price down as a down payment. So ends up being $3,500. So essentially, if you can kind of look at that from reverse, is you can't have a mortgage more than 96.5% of the purchase price, basically. Again, same sort of thing. If you're doing a 20% down payment, you're buying a house for $100,000, you're going to have an $80,000 mortgage. So you're basically throwing that 20 grand at the mortgage, paying it down. Closing costs are basically costs to get the loan closed. Again, it comes from a few different things, and there is a distinction between what we'd call true closing costs and prepaid items. So probably the first line of your closing costs really come down to your lender's fees. What that would typically be called is a origination fee. A lot of times that would be kind of the first thing you're going to see on your closing disclosure, your loan estimate, is your origination fee, or maybe they call it a processing fee or an underwriting fee. It has a bunch of different names, but essentially is your lender's charge to do the loan. Again, they make money in different ways as well, selling off the loan and things like that, but they'll usually charge you maybe a set $500, $1,000, 1% of the loan amount is pretty common. So you see a bunch of things like that. So that is one of the biggest things you're going to look at when comparing lenders, is what their actual fee for the loan is. Again, obviously you're comparing rates and things like that, but what your lender is charging is really kind of how to compare and contrast. So that's what to kind of keep an eye on. And that's one of the biggest things you're going to be able to draw a distinction between lenders. The other fees that come directly from your lender would be points. Again, if you're doing government loans and things like that, a lot of times you're not going to get into this. Points are essentially paying down your interest rate. So you can put extra money towards the loan to basically, essentially in the sense, is make it more profitable for the lender so they can essentially give you a better rate. So again, if you're doing a government loan, you're not putting any money down, or you're doing 3.5% down payment, again, you're probably not going to really worry about points. Your rate will probably be fairly comparable. A lot of the government loans don't fluctuate that much. But if you're doing a larger down payment and you really want to get a really good rate, you can obviously throw extra money at it. Throw an extra couple $1,000s at your loan and get, quarter point, half a point, better. And especially if you're doing a bigger loan, that can make a big difference. So that is something to think about. But again, a lot of people doing the first-time home buyers and a lot of stuff like that, you're really not gonna worry about it all that much, especially if you don't have a lot of money to kind of put towards the loan. So where you're going to see a lot of these fees is what's called your loan estimate and your closing disclosure. So the closing disclosure is the last one you get. That's basically your finalized numbers, a couple days before closing, and then they get you a final one, right at closing essentially. But the loan estimate is the one you're going to be seeing quite a bit, which is if you're comparing lenders, or initially, looking at a particular house, you're getting numbers on a particular contract, and they'll get you updated numbers kind of throughout the process. It will break down all the fees associated with the closing, and you'll see some different numbers. And again, that first set of numbers you get isn't going to be the most accurate thing, because they're going to estimate the title fees and your homeowner's insurance and your property taxes and the state taxes and things like that. So really the only accurate thing is going to be like the lender's fees. So again, take it with a grain of salt, and your lender will kind of go through it with you. But it'll break it down kind of in a list format. So it's kind of start at the top as far as general closing costs is you're going to be seeing title stuff. So the title company, essentially, as a simple way to think about it, is like your lawyer that is kind of doing all the legal paperwork, doing a transfer of the ownership, doing the investigating kind of the background of the ownership of the property, the title search, basically making sure there's no issues as far as how the interest in the property has changed hands over the years, making sure there's a clean title, so you're not going to have issues down the road as far as someone calling you in 20 years and saying, hey, I have rights to this property. I have a deed from 1920 that said that I had partial ownership of this thing. So so that's essentially one of the jobs of the title company, is to search the title and make sure it's clean and nothing's going to come up with it. So with that, they're basically providing title insurance as well. So they're insuring, basically guaranteeing that they didn't mess up. They didn't, overlook something like that. So you get owner's title insurance and lender's title insurance typically as part of your closing costs. Again, one insuring you if there was a title dispute, one insuring the lender if there was a title dispute. So you'll see, again, title examination fees, title search, lender's title insurance, owner's title insurance, a bunch of stuff like that. So again, it usually is grouped right around the same area, all the stuff the title company is going to charge. So you can kind of pick that out fairly easily. So some of the stuff the lender is going to charge you. So they're going to try to pass off whatever cost they can onto you. So a few things that cost them money basically to do is your verifications of employment. They got to call your employer. Again, sometimes if you have worked with a small car company, it's free. But a lot of bigger companies now are automated through like Work Number, or there's a bunch of different systems that people use. So if you have some sort of automated system through your company, a lot of times it'll charge the lender to verify your employment. And $35, $50, something like that. So pretty reasonable, but again, they're obviously going to pass that on to you most of the time. If not, they might have a higher origination and then just kind of wipe all those costs off the board just to kind of compensate. But a lot of times you'll see those broken down. So verification of employment, credit report costs $30, $50 to pull your full credit report. Maybe they've had to pull it 2-3 times throughout the course of the process. So they want to try to recoup that money. A couple $100 here and there makes a difference. So they'll give that back to you. Again, they'll have a full estimate of how much they've paid, and they're not trying to overpay for this stuff and overcharge you for it, but they have to spend a lot of money to kind of do this stuff, so they want to pass it back, obviously. So as far as the title company goes, they'll have a few things that is specific to them, and they'll also kind of generate the quotes of a lot of the state and county fees. They'll basically calculate your property taxes. A lot of times they'll do the tax certification, calculating what the new property taxes will be after the purchase, because they'll be adjusted a little bit. But there are like county fees as far as basically changing the county records, and transfer taxes, which is, think of it basically as kind of sales tax. Basically, you transferring ownership from one to the other, the state or the county is going to tax you on that. Some of the big ones you'll see, which they are technically closing costs. A lot of times they'll be rolled into the loan, but you do have the option to pay them at closing, is the government fee associated with your mortgage. So USDA, FHA, VA, all have a funding fee, or the USDA calls it a guarantee fee. FHA calls it the upfront mortgage insurance premium. So it's between maybe 1 and 2.5% of your loan amount that government program is charging you. So that's something to think about as well, and your lender will run through that with you. You do have the option to pay that. Again, if you wanted to, you could pay that at closing. Not many people do because, again, the people going with these government loans typically don't have the extra money to put towards it, but you have that option as well. So that's something you'll be seeing kind of on the breakdown. Typically, again, isn't adding into your bottom line as far as what you owe, but is basically broken down on that loan estimate most of the time. So that's the general ballpark as far as your true closing costs. Those things are, money that is needed to close the loan, the funding of the loan, of the processing of the loan, the lender and the title and the state, and all these fees that you're getting charged to actually complete the process. So the other side of it, again, technically aren't closing costs, but are money that is due at closing typically is your prepaid items. And what that typically is, especially when you escrow your taxes and insurance and things, is you call them prepaids. So your homeowner's insurance, your property taxes, when you're escrowing them, you have to you start an account essentially where you are always 6-8 months, a year ahead on that bill. Something to keep an eye on. And again, the lender will try to estimate the best they can. Get a ballpark as far as homeowners insurance. Look online and get some ballpark ideas of the taxes. But again, until that number is calculated and you get an actual quote for insurance and title company gives them the updated tax numbers, it's still kind of a wild card until then. The one other prepaid item that not a lot of other people think about, and again, it's fairly minimal anyway, is the way it's kind of broken down, but is your prepaid interest. So what they want to compensate for is when you close, your payment isn't going to be due for at least 30 days. Typically, you finish the month you're in, say you closed on February 15th. You finish the month you're in, so you're to March 1st, and then you get a full month before your first payment. So first payment April 1st. It's compensating for March already in the payment. You're paying, your first payment in April, you're paying basically March's interest. But that 15 days in February, or less than 15 days, whatever it is, that interest isn't calculated into your payment. So you need to compensate for it. You need to pay at closing. So again, at 4% at $100,000, the 15 days of interest isn't that much, maybe $100 or whatever it is. But it will, obviously add to your closing costs. So if you're doing a higher loan amount, it can make a bigger difference. Or if you close right at the end of the month, you're closing the last day of the month, or you're closing the day before the last day of the month, and you have 1 day of interest to pay. Obviously, that doesn't break down to a lot. But maybe you're closing on the 2nd, and it ends up being $300 or $400 worth of interest that you end up paying. It can really affect it. But again, you also have basically 2 full months before your first mortgage payment then. So it kind of evens itself out. But that is something to think about. It is one of the costs that are added into the loan. As far as kind of figuring all that. So I know this was a lot to throw at you. It'll look a lot different. When you get it in front of you, it'll be itemized and listed out. And again, a lot of these things will kind of jump out at you. But a lot of times it looks complicated. It's not supposed to look extremely easy when you're staring at it. And the lender will go through it with you, and they're actually legally required to. Once you get that loan estimate, walk through it with you and make sure you understand what you're looking at. They'll answer any questions you have. They want to make sure you understand what you're looking at, because if you don't get the information from them, you can get it from someone else. So if you have those questions, talk to your loan officer, ask for a loan estimate when you're making an offer on a property, so you can get a breakdown of those costs. But again, if you see, a $5,000, closing cost, just kind of keep in the back of your mind, a lot of these things are estimates. You can ask, what are you estimating for insurance? What are you estimating for taxes? And they'll, and how much, prepaid are you kind of factoring in? Do you need a full 12 months, or are we only doing 6 months? Because again, those will make a huge difference as far as what you owe. And you want to understand, if you're comparing lenders especially, don't just go off the one that just shows you a lower amount, because it doesn't really mean anything unless you're kind of comparing apples to apples. So compare their fees, compare what they're quoting as far as the title stuff and the transfer taxes and the prepaid stuff, because you can fudge the numbers quite a bit and make them look really low. Make it look like you closed on the last day of the month, quote really low homeowners insurance and taxes. So it really looks like a really low number, and then when you get all those estimates in, your closing costs get jacked right up. And hopefully not a lot of people are doing that, but no, it's not very hard. So if you guys enjoyed this, hit the like button, subscribe. Again, leave a comment down below if you found this helpful at all. Again, I love making videos like this. I want people prepared, and hopefully we can make more like this in the future and get you guys prepared to buy a home. Have a good day.